The investor who loved to lose. I mean, that sounds completely backward, right? We're talking about Stanley Druckenmiller, who is, without a doubt, one of the greatest investors of all time. So how in the world did he build a legendary career by losing? Stick around, because his secret to winning is one of the most powerful and counterintuitive lessons you'll ever hear on Wall Street. First, let's just get a sense of the numbers, because they are staggering. For 30 straight years, from 1981 to 2010, the man averaged an annual return of 30%. Okay, let that sink in. 30% for 30 years. And maybe the craziest part, he never had a single down year. That's a record so unbelievable, it's basically considered untouchable. So, what was his secret sauce? Well, when somebody asked him about it just recently, that was his answer. He says he has no idea. And honestly, that's what makes this so fascinating. The guy with one of the greatest track records in financial history looks back on it almost like it was somebody else. So if he can't even give a simple answer, you know we've got to dig a little deeper. And that brings us right to the central puzzle we're going to solve together. Because, and you're going to see this, Druckenmiller was wrong. A lot. So how do you square that circle? How does that work? This isn't just about stocks and bonds. It's a deep dive into psychology, discipline, and totally flipping conventional wisdom on its head. You've probably heard this old Wall Street saying a million times. It's the classic warning against getting too greedy. Be smart, take your profits, don't put all your eggs in one basket. It's the safe path. It's what they teach you in business school. Be a bull, be a bear, whatever you do, just don't be a pig. And then Stan Druckenmiller comes along and just blows that whole idea to pieces. He doesn't just disagree with it. He leans in and proudly says, yeah, that was me. I was the pig. He truly believes that being a pig was the only way he could have achieved those incredible returns. So what on earth does he mean by that? Okay, now this is really important because his pig philosophy isn't just reckless gambling. No, it's a super disciplined four-step process. First, you have to be patient. You wait and you wait for that one, maybe two opportunities a year that you believe in with every fiber of your being. And when you find it, you don't just dip your toe in the water, you go for it. As his mentor, the legendary George Soros, taught him, when you know you're right, you have to go for the jugular. But, and this is a huge but, here's the other half of the strategy, the part that makes it all possible. You can't go for the jugular if you don't have any money left to bet with. Druckenmiller's absolute #1 rule above everything else is survival. He says great long-term returns come from two things: hitting home runs and not losing your money. You have to protect your capital at all costs so that when that fat pitch comes right down the middle, you're ready to swing for the fences. And this right here, this slide, just boils it all down to its brutal, simple core. It's a two-part rule. When he's right, he is absolutely relentless. He squeezes every last drop of profit out of that opportunity. But the moment he realizes he's wrong, there's no ego, no hoping it'll come back. He just gets out immediately. A colleague of his mentor, George Soros, put it perfectly. When George is wrong, he doesn't say, I'm right, they're wrong. He says, I'm wrong, and he gets out. Same exact philosophy. And here's the secret sauce, the magic of how it all works. His success is not about being right more often than he's wrong. In fact, his batting average is probably under 500. His genius is in this incredible asymmetry. The handful of times he's right, the wins are so gigantic that they completely wash away all the small discipline losses he takes along the way. It's not about how often you win, it's about how big you win. And this, he says, was the single most important lesson he ever learned. And he learned it from George Soros. Druckenmiller said Soros would almost never get mad at him for losing money on a trade. The only time he'd really get in trouble was when he was right on a trade but didn't bet big enough. This quote right here, that's the entire philosophy. That's how you win by loving to lose. All right, so that's the theory. It's fascinating, right? But how does this actually work in the real world, right now? Let's jump into the modern playbook and see how he's applying these exact same principles to today's markets. So let's take his now famous AI trade. It all starts back in late 2022. He gives a lot of credit to a younger partner at his firm who spotted the trend early and said, we should buy NVIDIA. So he bought some. Then, just a month later, ChatGPT comes out. He said even an old guy like me could figure out what that meant. And that was it. That was the signal. He went for the jugular, piled into the position, and rode that stock all the way from about $150 a share to over 900 before he started trimming. I mean, it's a textbook example of his philosophy in action. But what's really interesting is how he thinks about it now. He actually sees a lot of parallels to the early days of the internet bubble. He's convinced AI is a massive, world-changing thing for the long term, but he thinks it's gotten a little too frothy in the short term. The road might be bumpy, and the really huge payoffs could still be years away. This just shows his flexibility, right? He's got the incredible confidence to make that massive bet, but also the humility to say, okay, things are a little hot, time to pull back a bit. Now, you can't talk about Druckenmiller's strategy without talking about central banks. He famously said, earnings don't move the overall market. It's the Federal Reserve. He believes it's all about liquidity, which is just a fancy word for how much money is sloshing around the financial system. That's the real rocket fuel for asset prices. And he's a huge critic of the Fed giving forward guidance. Telling everyone what they think they're going to do. He says they should just react to the data, stop trying to be rock stars, and just do their job. Let's look at another one of his big conviction bets, Argentina. The story is just pure Druckenmiller. He watches President Milei's big speech at Davos, gets super excited about it, and immediately, like right then, uses an AI tool to find and buy the most liquid Argentine stocks he could get his hands on. That's his invest, then investigate philosophy, right there. His thesis was simple. Here's a really smart, radical leader in a country that is absolutely desperate for change. Now, just for full context, other sources have pointed out that his firm is a huge investor in Argentina's main ETF, and that he has connections in government. We're just laying out all the details from our sources here so you can see the whole picture of the bet. So after we've looked at his whole philosophy, his wins, his playbook, we come back to that one central question. What is the real secret here? Is this guy just a once-in-a-generation genius who can see the future? Or is it something else entirely? And here it is, the answer, straight from the man himself. He says it's not about IQ, it's about discipline. It's about having the mental toughness to build a set of rules, even if they seem totally crazy to everyone else, and then having the guts to stick to them, no matter what. His system is simple, but as we've seen, it is incredibly difficult to actually pull off psychologically. And this really is the heart of it all. His secret isn't just one thing. It's this rare, almost paradoxical combination of two traits that don't usually go together. On one hand, you need supreme, unshakable confidence to bet the farm when you think you're right. But on the other hand, you need extreme humility to admit you're wrong, instantly and with zero ego, the second the market tells you so. He's not just a great winner, he might just be the world's greatest loser. And the real question is, could you do that?